We got some massive news from Bloomberg about Nvidia stock. The U.S. Justice Department sent subpoenas to Nvidia and other companies as it seeks evidence that Nvidia violated antitrust laws. This comes as the AI giant reportedly commands an estimated 80 to 90% market share of the AI-optimized data center market for accelerated computing. The stock was down almost 10% today, but that price action was mostly unrelated to the news, as the entire stock market was down on weaker than expected macroeconomic data that is bringing fresh concerns about a recession in the US. Still, the news of the subpoenas has concerned Nvidia stock investors, so let me share with you the details of the action and what it could mean for Nvidia stock investors. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so here's the news. Bloomberg reported that the U.S. Justice Department sent subpoenas to Nvidia Corporation and other companies as it looks for evidence that the chip maker violated antitrust laws. This is an escalation of its investigation into the dominant provider of AI processors. And this is really interesting to me. The timing is really interesting because just today I published a video about Nvidia stock and how it's dominating the chip market. And I shared with you the details, and the details were from an article that was published in the Wall Street Journal that talked about how CEO Jensen Huang is increasingly broadening his focus, seeking to widen its advantage over competitors by offering software, data center design services, and networking technology, in addition to the powerful silicon brains, the chips. He's trying to build Nvidia into more than a supplier of a valuable hardware component and trying to make it into a one-stop shop for all the key elements in the data centers. And in that video that I published this morning, I highlighted that when you have a dominant market share, the way that Nvidia does, it does a few things for you. Number one, it allows you to exercise pricing power. You can raise prices and charge premium prices because there is no competition, or the competition is so far behind that your customers will still buy your product. That's one thing you can do, and Nvidia has already done that, and you can see that demonstrated in Nvidia's phenomenal gross profit margins that are approaching that of software companies. Even though Nvidia is primarily a hardware company, its gross profit margin near 75% is almost as strong as companies with no physical products, which is unheard of. But on top of that, Nvidia's market share is so dominant that it's also persuading customers to buy its other products, its CPUs, its networking equipment, and other things that Nvidia is also selling in addition to the powerful accelerated GPU. And so that's where I discussed that Nvidia was starting to exercise its market power, its market dominance. And I just talked about this in the video this morning, and now this news comes out where the Justice Department is investigating Nvidia for its dominant market share, suggesting it might be violating antitrust laws. So the Justice Department had previously delivered questionnaires to companies. It's now sending legally binding requests to recipients to provide information. That takes a government a step closer to launching a formal complaint. Now, obviously, I don't know whether or not Nvidia has been conducting antitrust violations or conducting anti-competitive behavior. Judging by its market dominance, it's very clear that Nvidia's market share and its position in the market vis-a-vis its competitors is so dominant that it can, if it wants to, exercise this kind of anti-competitive behavior. It's in the position that it can. Not very many companies are in that position because, first of all, you've got to have a product and a service that's so dominant, that's so ahead of your competitors, that you can exercise this kind of power without fearing that your customers will purchase your competitors' products or that they'll just not buy your product at all. So you've got to be incredibly confident in your product, in how good your product is, and how much value your product delivers to be able to exercise this kind of negotiating power. Antitrust officials are concerned that Nvidia is making it harder to switch to other suppliers and penalizes buyers that don't exclusively use it its artificial intelligence chips, according to people who asked not to be identified because the discussions are private. And so I wouldn't be surprised if Nvidia is giving priority treatment to customers that are exclusively using its own chips. I think that would be a no-brainer. I wouldn't be surprised if Nvidia is trying to make it harder for customers to switch once they purchase Nvidia's products. This is normal business practice. You like to keep your customers coming back to you for replacements and upgrades and service and maintenance. Every business wants that. The difficulty here is that Nvidia is so powerful that antitrust officials can view that as the company is just flexing its power and it's not really delivering value. It's not winning that on merit. But Nvidia's management suggests and argues otherwise. So in response to questions about the probe, Nvidia said that its market dominance stems from the quality of its products, which deliver faster performance and a lower total cost of ownership. Nvidia wins on merit, as reflected in our benchmark results and value to customers, who can choose whatever solution is best for them, the company said in an email statement. And that's been true. You look at several of Nvidia's customers and you look at its benchmark against other providers of similar products, and Nvidia is so far ahead that its customers are willingly choosing Nvidia over its competitors. And maybe these competitors are not happy that they're having to pay Nvidia these premium prices, and maybe they're, just applying some pressure to Nvidia behind the scenes here, trying to get Nvidia to back off a little bit in some of their business practices and try to extract as much value from its customers as they possibly can while they're in a significant lead over their rivals. And I would agree with Nvidia here that they are winning based on their quality of products and based on merit. Right now, there is no other choice that competes with Nvidia in regards to training large language models or inference on large language models and many other AI benchmark tests. Customers like Nvidia's full suite of product offering, including the ecosystem, the CUDA software that brings everything together, and it's more of a turnkey setup, whereas competitors don't have what Nvidia can offer. Now, as far as what this means for investors, in general, I've not been afraid of investing in companies that are facing these kinds of probes. In fact, you can say I've been attracted to these kinds of companies that face these kinds of scrutiny because I'm attracted to companies that have this kind of market dominance. You look at Alphabet and Visa, which are two of my other top stocks to buy. Nvidia as well is one of my top stocks to buy. And you'll notice that over the last year, these companies have been the subject of regulators because they are so dominant. But the dominant business is what attracts me as an investor. I like businesses that have this kind of dominant position. They can exercise pricing power. They can generate lucrative profit margins and cash flow. And that's really attractive for an investor. Now, in the worst case scenario, should it come to that, if the regulator forces Nvidia to sell off and split off parts of its business, that's not always a negative. Sometimes companies can sell these parts of their businesses at such higher prices that it might be a net benefit, right? When you look at all of the pluses and minuses. So it's not clearly a minus if they are forced to diversify away from some product segments. So overall, when I see these kinds of regulations and when I see these kinds of news items, it doesn't scare me away as an investor. And so I don't feel this is a reason for Nvidia stock investors to panic. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.